Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. This is Cashflow Ninja. My name is MC Laubscher. Thank you so much for joining me in another episode of Cashflow Ninja and spending your most valuable resource, your time, once again with me on the show. Please check out all of our past shows with Cashflow Ninja, such as the one that I'm going to interview right now at cashflowninja.com. There's over 700 episodes recorded over the past 5 years. We've got resources, tools, and more there. Everything at cashflowninja.com. I've got another fantastic Cashflow Ninja joining us today, Anthony Pompliano. You might know him as Pomp. I've been following him. He really last year took his content to the moon. Has a fantastic newsletter that I subscribe to. I would highly recommend it daily. He drops it every single morning in your inbox. You can subscribe at pomplater.com. Pomp, welcome to the show.
Absolutely. Thank you so much for having me. I'm excited to do it.
So for folks that are not familiar with you and what you do, if you could please just share a little bit about your background and what you did before you became a superhero.
Still working on that last part. I was in the military for a while, worked at Facebook, built a couple companies, and then started investing full-time in 2016. And I've invested over $100 million into the crypto and Bitcoin ecosystem. And generally just think that it is the place where probably more innovation than anywhere is happening. And so just spending time learning alongside everybody else, creating some content and investing money.
So what was the initial thing that got drawn you into crypto? Obviously, you were at Facebook. You were in the tech space and saw this. What were some of the initial things that you looked at and said, I got to get into this?
Yeah, it was mining. So I saw mining. I had a kid, JP Barrick, who basically kind of gave me the rundown on like, hey, here's how the mining process works. I said, this is basically just a data center on steroids. There's persistent demand. I don't need a sales force. The unit economics are better. And I'm going to get this asset. And that asset actually ends up being something that can go up in price as well. So it's kind of an expanding balance sheet on top of it. And so I just went down the rabbit hole. And next thing I knew, I was like, man, I should go spend way more time focused on this than anything else. And that's what I did.
And one of the interesting things, and actually this is what I learned from you, because a lot of folks think about how much energy do these data mining, these crypto mining things use. Maybe you could speak to that, because I think that's some information that not a lot of people are aware of.
Yeah, look, it obviously takes energy to run data centers. With Bitcoin, though, I think the big draw is always, or the big argument is, it's not clean energy, right? It's super wasteful. But what you have to remember is that this is the strongest computing network in the world. Like literally this is the only computing network in the world that is unhackable from a computer strength standpoint. And so of course it's going to take a lot of energy, but the nice thing is that over 75% of all of the miners on the network use renewable energy. And on top of that, there's a strong argument to be made that not only is there R&D and investment dollars going into the production and the search for and the development of renewable energy, but also there's a curbing of non-clean energy as well. So you see things like in the Permian Basin, gas flaring is a great example. The methane emissions that come from the oil and gas industry are very high. What you'll see though is that there's a bunch of people working. There's this company, Great American Mining, that one of my friends, Marty Bent, works with, and they're basically just capturing the gas flare. They're reusing that for additional power, and they're able to turn what was a kind of wasteful part of that process into Bitcoin by using that energy to power Bitcoin mines. And so I think that that's a perfect example where not only is Bitcoin mining a very kind of global, decentralized, beautiful technical system, but also what you're starting to see is that it's having an ancillary impact in a positive way on the energy industry, both from a drive to develop innovative renewable energy, but also to curb all of the kind of wasteful, non-clean energy as well. And so ultimately, I think that every power producer in the world will have some version of Bitcoin mining that they do as a way to do everything from load balancing or demand balancing all the way to curbing some of the wasteful aspects of their oil and gas process.
Well, let's set the table a little bit with Bitcoin, because obviously there's some of the characteristics that's playing into the economy, what has been happening in the economy, the monetary policies of all of the central banks going to get any crazier, and also the fiscal policies of a lot of the governments, which are all broke, whether it be national, federal, state, provincial, and so forth. Maybe you want to speak to that and why this is a solution that is here for the time, especially in the current environment that we're in.
Yeah, I mean, look, it's we basically live in this crazy, crazy world where central bankers and elected officials have decided that they are going to change the rules whenever they want, however they want, and we as citizens are just going to sit there and take it on the chin. And there's a lot of people who say, I didn't sign up for this. And so if you're going to basically come in and you're going to manipulate interest rates and you're going to use fiscal and monetary stimulus to continue to prop up asset prices and kind of continue the status quo, you shouldn't be surprised when people elect to go and operate and kind of sustain in a system where the rules are clearly defined, no one can change them, and no single individual or organization has control over the system. Like, people want to have confidence and the ability to audit what is going on. If you screw with people's money, they're going to leave. And that's what we're seeing happen in the legacy system is we're seeing central banks around the world who decided to do emergency rate cuts. They decided to print a bunch of money, and they claim that it's all in the name of saving the little guy during a time of chaos and uncertainty. But actually what you find is that this system works how it is designed. It is not a bug in the system. It is a feature that the rich get richer and the poor get poorer. And that's because there's an education gap. The education gap is that the rich people understand get out of dollars, get into investable assets. You do not have to be a genius in a bull market. You can literally just get long investable assets. And the president of the United States, the Treasury Secretary, the Federal Reserve, and elected officials are going to make you rich. That's literally all you have to do. Be long investable assets and let them go to work for you. And it's amazing because not only do they work for you on the governance side, but also they work for you on the financial side. Now, the problem is if you don't know to get out of the dollar and get into investable assets, you end up trying to save money. And as we know, savers lose and investors win. And so what happens on the savings side is that people are simply taking whatever they don't spend, they're putting in their bank account, they're living paycheck to paycheck, and they don't understand why they can't get ahead, kind of that rat race feeling. And the reason is because the money that they're putting in the bank is actually losing purchasing power. And so over time, what's happening is that by continuing to intervene in markets, the government and our elected officials and our central bank is stealing the wealth of the bottom 50% of Americans. There's 45% of Americans own no investable assets. And so on top of that education gap, then what you get is you get kind of a compounding effect where by actually intervening in markets, we are seeing the rich get richer, the poor get poorer. And so you get a widening wealth inequality gap. It leads to more social instability. It leads to all sorts of issues, including an economy that is now addicted to monetary stimulus. And therefore, the next time that we have a market downturn, they not only have to step in to save the system, but also, too, they've got to step in with larger and larger monetary and fiscal stimulus. And so ultimately what ends up happening is they are running a bubble. And that bubble can persist for a really long period of time. I don't know when it ends. You don't know when it ends. Nobody knows when it ends. Could end next year, could literally last for the rest of my life. But when you get into this situation where there is kind of manipulation of an economy to prop up asset prices, I think that people are saying, I don't want to play this game anymore. They're opting out. They're going to a system that has defined rules that everyone understands, that everyone can audit, and they're choosing to put their wealth there. And that's why I think Bitcoin is becoming so popular across the world, from everyone from retail investors to institutional investors, is because it has that set rule base that everyone can see, that everyone knows is everyone's playing by the same rules. And that's the beauty of Bitcoin.
Yeah, it's interesting that the folks talking about wealth equality constantly, reading from a teleprompter, are the people causing this in the first place. And now they're offering the solution, which is more money. And it looks like the new administration is already ramping up things to get not even the printing presses, it's now just the keyboards, right? Digital numbers typed in, right? And this gives you an option, like you said, through computer coding. You know exactly how many Bitcoins are mined per day. You know exactly the supply that's there. So you're kind of opting out of the system. So maybe if you could share a little bit what's going on with Bitcoin right now and crypto in particularly? What are some of the biggest trends that we should pay attention to, and where are we? Because we've seen kind of a different cycle. We've seen the early adopters are in. There's certain trends that are coming now. We're seeing different players coming in. Obviously, Paul Tudor Jones, Stanley Druckenmiller, MicroStrategy with Michael Saylor, and so forth. There's a lot of things going on. Where are we at, and what's happening?
I mean, look, it's a pretty simple situation, right? Bitcoiners hold Bitcoin and they don't want to sell. And institutions are showing up and they're saying, hey, there's 18.6 million Bitcoin. We want some. And the Bitcoiners say, we're not selling you our Bitcoin. And so the institutions say, well, I'll pay you back in October. I'll pay you $12,000 of Bitcoin. And Bitcoiners said no. And they said, what about 15? What about 17? What about 20, 25, 30, 35, $40,000? And as they had to keep increasing the bid, they were doing that to try to increase the liquidity and get Bitcoiners to sell the Bitcoin. Now, still 60% of Bitcoiners, give or take, are not selling their Bitcoin. They are not selling. And so the institutions are going to have to keep bidding higher and higher and higher and higher in US dollar value to try to unlock that Bitcoin. And so what you end up seeing here is if Bitcoiners won't sell and institutions want to buy it, the US dollar price has to appreciate in order to accommodate everyone. So when you see that happening, what you have to remember is that it's not just the financial institutions that are showing up. They're here, right? They're no longer, oh, we think they're coming. They're here, they're buying, and they're buying in a big way. Next up is the corporations. Those corporations are going to show up and they're going to put Bitcoin on their balance sheets. We've already seen MicroStrategy do it. We've already seen Square with Jack Dorsey do it. There will be many more. I would not be surprised if I saw Tesla do it by the end of the year and many other kind of Fortune 500 companies. And so if that occurs, you're then going to get even more buying demand. Then with the next step after corporations. So you go retail, financial institutions, corporations, and then eventually central banks. I believe that in the next 10 years, we're going to see central banks put Bitcoin in their global reserves and use that as a reserve asset. Maybe it won't be the only reserve asset, but it will be one reserve asset of a few in that reserve for a central bank. And so now all of a sudden what you start to see is like, wait a second, the supply is going to stay persistent. There's only ever going to be 21 million Bitcoin, but demand is constantly increasing for this asset because of those sound money principles and the digital application of them. And so ultimately, if you measure things in US dollar price, what you're going to see is the US dollar price is going to explode over a long period of time. And there will be volatility along the way. But I fully believe that we are going to see $1 million Bitcoin price at some point in the future. And so it's just a matter of, if you want to measure your wealth in dollars, Bitcoin is a great asset to hold and it'll appreciate in US dollar terms. But the thing that most people don't realize is that most of the Bitcoiners are not denominating their wealth in US dollars. What they're doing is they're denominating it in Bitcoin. They know how much Bitcoin they own. They know they're not selling any and they're trying to accumulate more. And so when that happens, they do not care what the US dollar price is. What they constantly think of is one Bitcoin equals one Bitcoin. I always say to people, how much did the dollar go down? And it was like, what do you mean? I said, well, the purchasing power went down. Don't you know about that? Don't you measure that? No, of course not. Nobody's like, oh man, the dollar is super volatile. Of course not. Everyone always talks about Bitcoin because Bitcoin is priced in the dollar. But when you switch your mindset and you start to actually denominate everything in Bitcoin and Satoshis, you start to realize that actually the dollar is super volatile. The dollar's gone down a bunch. The dollar against Bitcoin is down and it's going down further and further and further. And it's going to keep going down. Why? Because that's the way the system is created. Is the dollar's down against real estate, the dollar's down against the stock market, the dollar's down against precious metals, the dollar's down against Bitcoin. So why would you hold dollars if all of the assets are appreciating in price over a long period of time? Of course, you've got to get out of dollars, get into these assets. And so in the Bitcoin market, Bitcoiners realize this is an asset that I want to hold. I want to denominate my wealth in it. It is my reserve asset. I'm not selling it. I don't care about dollars. And so that when the institutions show up, they got to bid higher and higher and higher. That's where you get this explosive price of kind of 400% in a short period of time, because the institutions showed up and looked around the room and they realized there's no Bitcoin to buy. I got to bid higher. And so I think that as more institutions show up, you're just going to see them bid the price higher and higher and higher in the coming months.
Another thing that is quite fascinating to look at is the crypto finance space. DeFi has been pretty interesting. What are some of the trends that you're seeing there? Because to your point, in the past, you would have to liquidate some of your Bitcoins, and let's just say to buy a car or a house or something like that. But now through the space, you literally can hold on to your Bitcoin and leverage that to acquire other assets.
Yeah, look, DeFi is super interesting to me, right? So there's three types of technologies that I'm really interested in the 2020s as of right now. I'm really interested in decentralization technology. I'm really interested in privacy-centric technologies, and I'm really interested in Bitcoin-related technologies. And those three things are interrelated, but can also be separate at the same time. And so when you start to think through kind of decentralized finance, first you've got to start with Bitcoin. Bitcoin is decentralized money. That was kind of the first and the largest today. Then you start to look through the rest of the stack. And so you're going to get decentralized exchanges, decentralized lending, you're going to get decentralized insurance. Like you just go down the line, everything in the legacy financial system is going to be decentralized over time. The big debate right now, and in fact, I think it's kind of a stupid debate, is like, where does it get built? Who cares where it gets built? I literally couldn't name all the protocols and how it works for the internet, but I use the internet every day. And I think that's what's going to happen here is like, it doesn't matter what protocol it ends up getting built on. It's just the fact that it works for people and that people adopt it. And the market will determine who actually gets that adoption. And so from my standpoint, it's a foregone conclusion that everything's going to be decentralized in the financial system, because ultimately what we're doing is we're getting rid of a system where the legacy financial system organizations, they profit by wedging themselves into bureaucratic processes. That's how they make money. They are middlemen. And so if you can strip out the middlemen, you can actually make a more efficient, lower cost system that's better for all players in the market, except for the legacy financial players. And when that happens, what you get is you get a global automated digital decentralized system that will look nothing like the legacy system, but you will still be able to buy the same assets from the same counterparties. You're just going to do it in a digital decentralized automated fashion. And that will be the most disruptive trend in our lifetime, simply because the way that the world operates is it operates on money. And Wall Street has hid from Silicon Valley disruption for a long time, but Silicon Valley's technologists are showing up and they are just absolutely beating the shit out of these Wall Street bankers, because the bankers don't have the tools, whether it is the actual knowledge nor the coding skills, to compete in a marketplace where there is a complete meritocracy of ideas. What they have historically relied on is a hierarchy of ideas. Oh, you're the CEO of the company, it's your idea, then we're going to do your idea, even though it might not be the best idea because you're the CEO. Oh, you went to Harvard? Oh, okay, of course. Now all of a sudden we're going to listen to your idea because you're a Harvard man instead of somebody else. Now what we're getting to is it doesn't matter who you are, where you're from, what your education is, how much money you got paid, or what your title is. Instead, what we're going to say is, what is the best idea? What is the best technical solution? And that is a world that Wall Street is not prepared to win on. And Silicon Valley right now is absolutely eating their lunch, because Silicon Valley has a skill set and also has the knowledge to win in a digital decentralized world. And I think we're only going to see that trend continue.
You know, what's fascinating is there's one part of my business that operates in the insurance space, and that's a very old, outdated, I mean, it's very slow moving, especially mutuals, like mutual insurance companies. And you've already seen MetLife take a look at blockchain technology and doing some testing on that, and Mass Mutual just actually purchased $100 million of Bitcoin. So when I saw that, I'm like, they are already stepping in there, these very, very slow moving dinosaurs compared to any other industry. So to your point, it's starting to, some folks are getting the message already. One thing that is exciting, you know, I have young children and I'm looking at them and I'm like, really, in 5 years, they could never know what it feels like to go into a bank, you know, which is pretty exciting stuff.
Well, and what you have to remember too is, like, I always say that there's two important things to remember. So one is that ATMs, everyone used to yell and scream about ATMs, and they're like, oh my God, ATMs are going to kill the bank teller job as an occupation. No one's ever going to go to a bank. There's more bank tellers today than there were before ATMs came around. So actually what ATMs did is ATMs improved the coverage for banks, got more people banked, and it led to more job creation for bank tellers. So I don't know necessarily if, like, quote unquote, banks go away. It's just they're going to look like a different form factor, right? And so the same thing can be said about the large Wall Street players. Wall Street is not going to get completely disrupted. What we're going to get is we're going to get have and have nots. There's a reason why Goldman Sachs has been around for 100 plus years, right? Goldman Sachs has navigated everything from the creation of the telephone to the internet to the kind of electronic QSIP world to electronic trading to eventually digitization and blockchain and cryptocurrencies and all this stuff. They're going to be fine. They're a forward-thinking firm. They've got very smart people, and they're already ahead of this, and they're trying to figure out what they're going to do and how they're going to play in the space. There are plenty of other firms, though, that are going to sit around, they're going to cross their arms, and they're going to say, this is stupid. We're X bank, and we're not going to participate in this stuff. I may fire somebody if they participate in this stuff, and therefore they're going to miss the boat. And so, again, have and have nots. If you have have an open mind, if you have an innovative DNA in your company, you're going to be just fine. If you have not the innovative mind or have not the innovative DNA, you're going to get absolutely smoked. And ultimately, that's the beauty of a capitalistic free market society, is that the winners win and the losers lose. And so don't be a loser, be a winner, embrace innovation, have an open mind, and go and actually try to figure out where the future is, and so that you're not left behind. And it's pretty simple, but it's hard to execute that stuff.
Yeah, to your point, even I believe it was the Banking for All Act or something with the government digital currencies in there already. Certain banks would be custodians, right? So their role would change, and obviously there's going to be winners and losers. Kind of an idea who's going to end up on the right end of that if you look at bailouts and the past. So I'm sure there's some folks already that's inside as an inside baseball on that. What are some of your thoughts on government digital currencies? We've seen that China already embrace that and roll that out and test that. We've seen some bills which have not been voted on. In the U.S., we saw a white paper that the European Union put out about a digital euro. Some thoughts on that, and also some thoughts on this new sort of system. We've seen the term floated out there, the new Bretton Woods. What are some of your thoughts regarding those?
Yeah, so I think the big thing here really comes down to two things, right? So one is every central bank around the world is going to create a digital currency, and they're not going to change their monetary policy. They're just going to change the technology form factor. So the dollar is still the dollar, the digital euro is still the euro, right, all the way down the line. But what they are going to do is they're basically all going to have this like nation state space race, right? Remember who got to space first, who got to the moon first. Same thing here. Who's going to be able to digitize that currency first? Who's going to be the one to get adoption of it across the world? I tend to think the United States will be pretty good in this. I think that China will also be very good at this, and maybe one or two other superpowers. And it's that kind of space race that will really drive a lot of kind of the acceleration for them to do it. Now, when they do it, a couple of things are important. One, when I digitize a currency, I immediately onboard millions and millions, if not tens or hundreds of millions of people to get digital wallets. So literally, they are going to accelerate digital wallets. The second thing I do is when every currency is digital, now all of a sudden the switching cost between currencies is drastically reduced, right? The friction goes down. Today, if I have dollars and I want, let's say, euros, I have to go to the bank and actually exchange the currency, or I've got to go to the literally the airport and do the currency exchange, and they rip me off. Well, if all of a sudden I can just press a button on my computer or on my phone, and I can switch between currencies, the friction goes down, that switching cost goes down. And so now it's much more fluid and you're gonna have capital flow. But if all of the currencies all have the same technology kind of form factor, there's no competition at the technology layer. There's no competition when it comes to the actual gatekeeper level. I don't have to compete between going to the bank and going to the airport, right? So those things are all kind of at feature parity. The competition now happens at the monetary policy layer. And the beauty here is that every fiat currency is the exact same. Sure, they compete on a little bit of interest rate manipulation. They compete on who prints more money on a relative basis, but they're all the same. They're all inflationary currencies. They all have very obscure rules. They're all decided by individuals that go into a room and they basically lick their finger, stick it up in the air, measure some wind, and try to guess what they should do. And then they wait and they see what the impact is later on. And so if everyone is an inflationary currency, fiat backed by nothing, run by a central bank, then you have Bitcoin. And Bitcoin's monetary policy is deflationary in structure. It's got a disinflationary supply schedule. It's run and owned by nobody. There's no individual organization that owns or controls it. The monetary policy is predictable and it is auditable over years to come. And so I think what you're going to see is when switching costs goes down between currencies, people are going to go from living in a single currency world where they get paid in one currency, they save in that one currency, and they spend in that currency. They're now all of a sudden going to say, wait a second, I should actually use this lack of friction to my advantage. I should get paid in the currency of that I'm getting paid in, and then I should go and I should store my wealth in the strongest monetary policy that has the greatest preservation of my purchasing power, which is Bitcoin. And then if I ever need to spend this money, I can always come back out because the switching cost is so low, and I can spend in dollars to pay taxes or do whatever. So that's kind of step one, is they're going to digitize these currencies, but really what they're going to do is they're going to drive adoption of Bitcoin, which is going to have kind of a counterintuitive effect. And then ultimately what they're going to do is they're going to accelerate. People are going to eventually say, why am I constantly going from getting paid in a currency to Bitcoin back to that currency? Instead, I should just get paid in Bitcoin. I should hold my assets in Bitcoin. I should use Bitcoin as my reserve asset. And that's when I think Bitcoin will not only have that happen at the individual level, but at the financial service level, at the corporation level, and at the central bank level. And eventually you'll have Bitcoin as global reserve currency.
It's going to be interesting. We've already seen an NFL lineman requesting to be paid in Bitcoin, right? So there's already some folks doing that. What's interesting too is, to your point, folks that think it's facetious saying that a bunch of central bankers sit in the room and stick their finger up in the air and see which way the wind blows. All you have to do is do a little research on the LIBOR scandal, and that's pretty much how it goes down and how decisions are made. Scary as it is. Let's talk a little bit about private equity. I know you have the Pomp Investment Fund. What is some of your philosophy with regarding to picking great companies from a private equity standpoint?
I basically look for two things. I'm looking for really compelling founders who are going after absolutely massive markets. And if I had to throw in a third thing, I'm looking for something that's non-obvious, but has a really asymmetric payoff. So basically, if somebody is really smart, they've got a weird idea and they're going after a big market, that's super interesting to me. And really, it's just because it's nearly impossible to kind of predict this stuff. Who would have thought that pressing a button on your phone and a car showing up could have been Uber, right? Who could have bet that the original website of, hey, do you want to come sleep in my kitchen on my air mattress, could have eventually became Uber or Airbnb. And so I think that what you really have got to look for is you've got to look for that compelling founder, kind of a non-obvious idea that they're pursuing and is after a large market. And if you kind of make enough bets on people like that doing those types of things, ultimately what you'll find is some of them will work out, some of them won't. The ones that work out will pay, many, many times over for the ones that don't. And therefore, you've got a pretty attractive investment strategy.
Let's talk a little bit about the opportunity. One of the trends that you mentioned was decentralization. And one of the things that come to mind when you say that now is social media, where a lot has happened. At the time of recording, with a sitting president of the United States basically censored, regardless of your thoughts or opinions on him. That's pretty crazy that happened. A lot of other folks have been censored or deplatformed and so forth. So there's a big, obviously, market for a decentralized social media company. What are some of your thoughts and what are some of the things that you're seeing there? Because I'm sure there's already folks working on projects in that space.
I think Jack Dorsey had it right. He doesn't want to be in this position. He doesn't want to have to be the arbiter of truth. He doesn't want to be the person who decides who gets to stay and who has to go. But naturally, when you have a centralized system with a leader, the leader's going to have to make choices, and that's part of leadership. And so what you're going to start to see is you're going to see developers and entrepreneurs build systems where they don't have control and they're not forced to be in that position to make these decisions. And they're actually going to offload that responsibility from them to you as the user. And now all of a sudden, you're going to have users who say, hey, these are the people I want to follow, these people I don't want to follow. And if you basically make that decision for yourself, you can't be mad with the decisions you make because you made them, right? And so all of a sudden, by having a decentralized system, one, everyone has a voice. Two, everyone's allowed to pick who they follow, who they don't follow. And three is that no government, no individual, no centralized company gets to decide who has on the platform, who's not on the platform. Now, that doesn't mean that that's the say-all, be-all, fantastic solution. There's no downside. There's obviously downside to that. But I think that we are moving to a world where people realize that we cannot have social media executives, governments, or frankly, the public, the media, anybody else through social pressure deciding who gets to say what and when. And so I think that that's just a really slippery slope. We know from history that that doesn't make a lot of sense. And I think that technologists are sitting by, they're watching this and they're saying the only way out of this is not to, we're going to come up with better rules, or, I promise I'm going to behave next time. Instead, the only way out of this is to create decentralized systems where now all of a sudden no one is in the situation that you have to make the decision. Instead, the platform simply gives you tools, and then you as the user are in full control of your data and also those that you follow and the information that you get. And I think that that's going to ultimately be the kind of solution that we all land on as something that makes it sustainable in the future.
Yeah, no, absolutely. It was quite incredible. It's been an incredible year. It's going to be another incredible year. Some thoughts on your overall wealth strategy from a personal finance point. You put out a lot of great stuff on Twitter on this too, from personal wealth creation. Some things that come to mind is we've got a lot of business owners and we've got some investors. So there might be folks already good at capital accumulation, but then managing that and actually growing and multiplying that is the next step, which is a separate skill set. Some thoughts on that?
Yeah, look, I basically think that you are very, very lucky right now if you have any cash, because there's a very simple strategy. You can literally get long investable assets. You can go in the refrigerator, grab a Bud Light. You can go kick back in the recliner and you can chill out, because the president, the Treasury Secretary, the chairman of the Federal Reserve, and elected officials are going to make you rich. That's all you got to do. You just got to get long investable assets. They are going to devalue the dollar and they are going to prop up asset prices. And there's going to be an asset price boom like we've already seen over the last 9-10 months. It is only going to continue. There's another $1.9 trillion coming down the pipe. And so for the next year or so, just be easy, relax, get long investable assets and chill out. Literally put your head back in the recliner, grab your beer, and you are not going to have to do anything. Now, of course, what that means though is you got to be able to drive cash, right? I always say that there's kind of 5 rules when it comes to personal finance. 1, you got to be able to spend less than you make. 2, you got to get out of debt. 3 is you got to have multiple streams of income. 4 is you got to get out of cash and you got to have investable assets. And then 5 is you just got to stay patient and disciplined. You're going to be happy. Like that's it. Super, super simple. It's timeless advice because it works. It's really hard to execute though, especially when you walks out, you say, oh man, I want that new car. Oh, I want this. I want that. Like don't consume material goods. Instead, literally live within your means and just take the excess cash, have a rainy day fund, and then invest the rest. And I don't care if you buy stocks, real estate, precious metals, Bitcoin, it's all going to do well. Literally, they are going to make you rich in terms of that asset price kind of inflation. And so if you are able to get into those assets, you're going to do just fine. I think that there's just a lot of people who that doesn't sound like that's that much fun. They want to be smarter than the market. They want to go pick stocks. They want to go do all this stuff. Sure, go ahead, do it. But from a high level, like that's all you're going to have to do is just be long investable assets. And literally the elected officials are going to make you rich.
You're going to have stimulus package after stimulus package after stimulus package all around the world. So it's going to be crazy. One habit I've observed from wealthy and successful people is that they're always studying. They're always learning. What are some of the things that you're studying and learning right now?
Yeah, so I basically only consume 3 types of content. I basically will listen to podcasts. I got a whole bunch that I put on rotation. 2 is my wife writes a newsletter, and super selfish of me because I basically try to coax her to cover things that I want to read. She basically just breaks down like the world's most successful people and companies, and so I love reading kind of biographical or kind of profile like breakdowns of like, hey, what is this person's story? What decisions did they make? How did they grow that? So that's just readtheprofile.com. And then I read Twitter, and I just follow a ton of people. I want as many differing opinions as possible. I put it all in my brain, and then I go for a walk and I synthesize it, and I try to figure out, hey, all these different pieces of information and data that I just got, who's right, who's wrong, how does it all relate to each other? And so between podcast, the profile, and Twitter, I've got a pretty good variation in the content diet, and then I just try to figure it out from there.
Yeah, you're a busy guy, so your time management has to be on top of things too, keeping really busy all over the place.
Well, you can see I talk really fast, so that helps.
Now, the core message in our show is to leave our families, communities, and the world better than we found by passing down a mindset, values, and principles to future generations, not just money. So if you cannot pass on any money to future generations, and we're allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
No fucking fear is 1. 2 is educate yourself. No one's coming to save you, and no one's going to look out for you like you look out for yourself. And then the 3rd one is just pursue happiness over everything else. We all die, and you ain't getting out alive.
Absolutely, and you got to have a little bit of fun with it too, which you definitely have with your Domino's pizza picks. So very, very entertaining. Where can folks follow you? We've mentioned the pompliano.com, which I would highly recommend. I'm a subscriber. You get it in your inbox every day. Where can folks follow you and stay in touch and on top of all of the many projects that you're involved with?
Yeah, pompliano.com is probably the best place, or on Twitter, just at @Pompliano. I do my best to basically share all of my unfiltered thoughts either in the newsletter or Twitter every day. And, sometimes gets me in trouble. Sometimes it's just educational and fun, but I'm enjoying it. So I'll keep doing it.
Absolutely. Another thing that I would also recommend is your YouTube channel, which you can just go on, because you do a couple of live streams, answer questions, and so forth. So I think folks can learn a lot about finance, about economics, and get all of their questions answered too. Really appreciate you taking the time to connect. Like I said, I've been loving the stuff that you put out and learned a lot from you. So thank you so much for your time, and thank you so much for coming on the show and sharing your journey and your knowledge and providing so much value for all of my listeners and viewers out there.
Absolutely. Listen, I really appreciate it. Cash flow is king, as everybody knows. So I big fan of the show, and appreciate you having me on.
And thank you so much for spending your most valuable resource, your time, once again with me on the show. Please be sure to check out all of our previous podcasts at cashflowninja.com. There's over 700 of them, community tools and resources. And another thing, we have our State of the Union with our friend Dave Steck on the 28th of January at 8 p.m. Eastern Standard Time. You can sign up at cashflowninja.com/state 2021. That's cashflowninja.com/state 2021. Until next time, live infinitely.
This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee